Okay, guys. So basically, what I want to do is, first of all, again, thank you so much for being here. And we're still like literally like in the past 30 seconds, another 20 people entered. So I do want to give it a couple of more seconds so that, people are in the room and ready to go. And first of all, I just want to say thank you so much to Anna for setting this up. This is really cool. I really enjoy I just enjoy doing things with Investor Expos. It's been great, and especially with Anna, such a lovely experience. And that you guys are here, so I'm super grateful for you guys taking the time out to spend it with me. So my goal here today is I'm going to be going over, I'm going to be doing my presentation, obviously, and hopefully you will learn something that will totally change the way you trade. But what's most important of all is the most important thing of all will be that you guys ask me your questions, right? There's a reason why you are here. There's a real reason why you are here, right? And the main reason is because you want to learn something, you might be struggling with something. So this is your chance to really do your thing. Danny, who are my trading mentors? So I have now been trading live for over 8 years. The first 2 years were really complicated. I spent literally over $20,000 in my education. I had mentors, I had one-on-ones, retreats, conferences, seminars. Oh my God, trading rooms. The list just goes on and on and on. Um, and one thing that I did start to notice is, and I don't want to badmouth any of my mentors because I learned something really great from all of them. However, the people that I was mainly being taught from were very aggressive. That's why scalping, I kind of fell into scalping. I didn't even realize scalping was such a thing, was when I started to go for the smaller targets because, again, I'm 100% E-mini. So that means I focused a lot on everything was through the ES futures. So everything is points, right? And so they were going for like 4 or 5 to 8 points. It was just too much for me. Also, a lot of times, and I can't even tell you the amount of money I spent on trading rooms and the losses that I did in the trading rooms because it's a really trading rooms can be really tricky when you're following somebody else's strategy and the majority of the trading rooms are just moderators, people who don't really even trade. And sometimes they'll just say, oh my God, there's a trade. And all of a sudden everybody in the room who doesn't really know what they're doing because they weren't really taught from like the beginning jumps into these trades. Sometimes you miss those trades, you start to chase those trades, and that's how you lose money, right? So I don't want to badmouth my mentors. Like I said, I've had some really great ones, especially when it came to psychology of trading. But I think eventually I evolved to something on my own. I simplified it to the point where I recognize that it's not as complicated as people like it to be. So, anyways, I'm gonna jump in to my presentation again. Like I said earlier, my whole reason to be here is for you guys. So please ask your questions. I will get to all of your questions, I promise. It might not be in that second, but I'll definitely get to all your questions. And I'm here to help you guys get the most out of this presentation. So today, what I am going to be talking about is understanding market language and how to spot those high probability trades through analysis, right? So the most important thing of all is, like I said before, like one thing that I was, kind of thrown into a lot of these academies, which kind of expect you to know the beginning, like the basics, and just like the most fundamental things. And nobody actually really focuses on that or teaches you that. And after I ended up losing a ton of money, quitting the whole thing, is when I realized that it's actually not as complicated as we think. It's not easy, do not get me wrong, but it can be very simplified. So that's what I really want to talk to you guys about today. Yeah, so I ended up developing my own strategy, but it's not even like my own strategy as far as, yes, I definitely have a very defined strategy that I don't really budge from anymore, but it's also for you, there's a reason to get to where I'm at, and that is through understanding what the market talks about. So let's get in. So if you guys don't know me, I am Marina, the trader chick. That's me with one of my very favorite little humans. And this is actually my family. I am an expat in Guatemala. I'm married to Guatemalan, but I've been now an expat here for almost 12 years. Wow, it's crazy. But in Central America for almost 20 years in total. I am trilingual. I'm actually a Soviet Union refugee. We left the Soviet Union during the Cold War, so over 40 years ago. So my main, I shouldn't say main, my mother tongue is Russian. So I speak Russian fluently. However, my main language is English because I pretty much was raised in the US. And we moved to Central America about 20 years ago. My husband was actually studying in Costa Rica first, and then we moved to Guatemala. So we've been in Central America for almost 20 years now. And yes, I speak Spanish fluently, but it is not my main language, obviously. And the reason why I bring this, yeah, I'm trilingual, not at all. The reason why I bring it up is if anybody has learned a new language in their later years, like in your 20s or 30s or even 40s or 50s, you'll know that it's a real process, right? So English, I learned it when I was tiny. So there was no real process. I learned it within a month or two. I pretty much was speaking it. However, Spanish, I learned in my late 20s. And I remember the first year, everything that people were saying to me, I had to take it in. I had to translate it in my head. Then, whenever I wanted to talk back, I had to translate it in my head. It was a process, right? And gratefully, I had a lot of very, very patient people that were helping me. But regardless, it's a process, right? Everything takes a long time. I was only able to speak to one person at a time. I'm not never in a group. But then after, I think it was probably like a year, a little bit more than a year, one day I woke up and I just spoke it. I just spoke Spanish. Not in So I just spoke Spanish. So I was fluent. Like everything that came into my head, there was no more translation, right? I just spoke it. And basically, what happened is that it became a norm to me. And one thing I recognize with the market is that it speaks to us. It actually has a real language. And that's what I want to talk to you guys about because many people don't realize that. And once you start to understand what it tells you, you'll be and work with it way better. So that's the reason why I bring up that I am trilingual. Also, we are travelers. I know right now we've kind of been homeward bound. It's an insanely important part of our lives. And normally we go away for 3 to 4 months out of the year. And when I just decided to really get into day trading, it was really important that it could have given me the lifestyle that I wanted. But before I was a day trader, I was actually a fitness instructor. I worked in all the top gyms in Manhattan as a fitness instructor. I loved it. It was one of my favorite things to do. This was like 20 years ago. It was awesome. And then when I moved to Costa Rica, I became a travel writer. I actually still have my site. You can still go and check it out. This was my first online baby, I guess you could say. But everything in my life revolved around travel at that point. And finance markets have just been always my passion since I could remember. Until finally, after I've already started this business without even thinking it was going to be a business, I came to a crossroads and I just turned 40 and I was like, I'm burnt out on the travel site and what do I really want to do? 40, you kind of start to rethink things. And I'm like, I've always, always, always wanted to be in the financial markets. I've been investing since I was 20, but investing, like I mentioned earlier, is really different. So I'm like, you know what? This is it. For my 40th birthday is when I paid sum of money to enter my first academy, and that was my gift to myself. And from there, it's been, I've heard it, the day trading journey, right? It's a journey. So before I begin the presentation, I have a free workbook, worksheet for you guys that you can follow along with the presentation. Okay, so make sure that you guys get it. Makingofadaytrader.com. Okay, makingofadaytrader.com. You can get the entire worksheet completely for free from here and just follow along. A lot of it also, there's literally what I use to trade, like my system, like how I look at the market. And if you go along with it, it'll be easier for you guys to follow along as well. So makingofadaytrader.com. Okay, I see that somebody here is from Mexico. I wish there was actual names here. I only see member. Conmigo. Okay, let's begin, guys. All right, so what are the basics of day trading? So for my biggest problem was, and I don't know if it's because, women do see the market a little bit differently. We learn that's what it was. But I mean, like I said before, I spent over $20,000 on my education, and nobody ever actually directly the basics. We're talking the basics as in, reversal areas, support resistance areas, divergences, even about, trends, whatnot. It was as if though we were kind of born with this information, and people would speak these terms all the time. Or what's a breakout? But no one would actually explain the basis of it. And every time I used to talk about it and ask, and with in like the retreats or in the chat rooms, it's as if though I was born with it, and I was always ignored by it. And I think but I didn't know that this was like the basics until after I ended up losing way too much money constantly. And I literally had to quit. I quit for a few months, but as we all know, the day trading bug, which I call it, we get bit by the day trading bug. We just don't want to stop. It keeps on itching. And in my case, that's exactly what it was, right? It was the itch. And I'm like, I know that I could do it. And that's pretty much the reason why we come back, is because we know inherently that we can do it. And when I came back, this was like over 6 years ago. When I came back, I decided to strip my entire charts. I used to have 3 monitors, 10 indicators. I mean, it was just nothing but this massive stress going on, right? It was so stressful. Just even looking at my trading station, it gave me like palpitations every time. So I decided to just strip everything, go to one chart and watch it. And I sat and I watched the charts for months, months and months. And one thing, that's when I started to recognize that there was a language that was speaking to me. And eventually I put back in 2 indicators, which I'm going to show you guys. And I started to recognize that there are certain basics that if we don't understand, it's kind of like what happens is a lot of times we get this is actually the perfect analogy of what I felt like when I was in different academies and trading rooms was, imagine you want to learn how to play the violin and you arrive to the conservatory, right? You're completely new. You've never touched the violin. You don't know anything. You don't even know how to hold it properly. And you get to the conservatory, and all of a sudden they're like, all right, go and jump into the symphonic pit with all those other musicians and just keep along. That's how I felt. Like I was like, oh my God, but I don't even know how to hold it properly. I don't know anything. And that's what it felt like to me. Like, all right, it throws you into the pit. And that's not correct, right? You do need to understand first how to hold the violin, how to understand which string is which, how to hold the bow, where to even place the violin, right? So those are like the basics. And and that's something that I feel like was never properly taught to me. And at this point, I can honestly say that I've had so much experience in so many different training rooms and academies that I recognize that barely anyone actually taught that. And without that, it's like build a house, but you just put in your windows and you forgot to put in the whole wall structure, right? It's not going to hold. And it's kind of like the same as in a car. And the reason why I'm really harping on this is because it's amazing the amount of people that come to me who are already live in the market and don't even understand if they're going long or short. And if you don't understand the concept between long and short and you're putting money in, how are you going to know if you're on the right side? It's amazing to me. And those are the basics that I'm actually talking about, just the same, right? Just like when you get in the car, if you don't know where the brakes and the accelerator are, or how to shift gears and how to do anything, how are you even going to move your car forward, right? And right now, I'm in this amazing moment in life when my 16-year-old is learning how to drive a car. I've been doing it for 35 years. So when I hop in, I pretty much know where everything is, but he's constantly like, what do you mean I have to shift gears? Where is first gear? So it's not given to us, in our DNA. We're born, we learn it. And it's the same thing with the market. And once you learn these basics, it becomes all natural to you as well. And it just gives you that solid foundation. That's what I want to talk about today. So just like I was mentioning earlier, when I came back, this is my chart now. So I used to have three different charts going on. Now this is it. This is my entire charting platform, right? I use two indicators. These are EMA lines and these are the MACDs. So here's a little bit more so you guys could kind of get a better idea. I use three EMA lines. I use, so EMA is different than the MA and the SMA. EMA is the exponential moving average. So it's pretty much the periods before what you're seeing, right? Again, I'm a scalper, so I look at smaller time frames. So this really helps me. So I use three different EMA lines, the 20, the 52, and the 135 period. And I use the MACDs. To me, the MACDs, they're my favorite indicator. They are the least lagging indicator. We all know that there's tons of indicators and most of them, they're lagging, right? They're really behind. And that's the reality of it. So with the MACDs, what I noticed is that it actually gives you a lot of notice when the market is starting to weaken, right? So when we are in the live market, the goal is, so what I recognize with the MACDs is that it gives you a lot of information beforehand that is starting to weaken. It might not weaken right away, but the fact that it's starting, it's kind of like if you're going to be going for a run and I'm going to bet on how far you're going to go, I'm usually going to focus on when you have the most amount of energy. But then when you start to go a little bit slower, a little bit less, this and that, guess what? I'm not going to be saying, oh my God, he might continue more. At this point, I'll be like, I don't know what they're going to do. They might turn around and say, you know what, I'm too tired. I have a cramp. So the MACDs are really good like this. Okay, so like I said, again, making of a daytrader.com. I'm going to have my entire worksheet with the presentation so that you guys could keep along. Making of a daytrader.com. Please go here and let's jump in. So let's begin. Market movement and the breakdown of a trend. Like I said, we all know logistically that there are three trends. It's obvious. We've got the upward trend, we've got the downward trend, and then we have the sideways trend. Now, I can guarantee you, I could bet the farm on this. If right now, if we all look back at our whatever tracking device you guys use, a journal, a piece of paper, an Excel, it doesn't matter, to track your trades, I can guarantee that 90% of the money that you end up losing will be in the sideways market, which you could call it the indecision area, the chop, the channel, whatever. It's all the same thing, but this is where the majority of the money gets lost, right? I can guarantee it. And if you guys are not tracking your trades, stop right now, because it's never going to happen for you, right? It's just never going to happen, because what happens is you imagine that you think that there's a good trade, you don't have a tracking for it, you don't know, you don't back test knowing if it is consistently good, and go in and you're going to lose. So you need to back test. You need to back test. I'm going to say that 1,000 times, because in every single industry in the world, people are back testing. Traders somehow overlook that and think that they could overcome it, and then they end up just donating money to the market. Okay, so let's break it down. Again, trending markets, we've got the downward trend, we've got a sideways trend, we've got the upward trend, right? So what is a sideways trend? It's kind of like, it's a bounce between here. It's the chop, it's the channel that's going back and forth, right? It's indecision, it's uncertain. So what is an upward trend? Pretty simple, right? Each pivot is higher than the other pivot. Obviously, we understand that pretty easy. It's called a bull market, market trending up, market going up, however you want to call it. So when we are looking at an upward trend, we are buying, we are going long. What does that mean? We are entering at a lower price and exiting at a higher price. That is going long. That's when we have an upward trend, right? So this is what it is buying. So if somebody says, oh my God, do I go long or short? Let me tell you, that question should never be asked in the live market, because that is just like, it's literally when you get in the car and say, where do I put the key in? And if you don't know where to put the key in, are you really going to be able to get the car going? I don't think so, right? So downward trend, pretty much the opposite. Each pivot is lower than the other pivot. Really important to know for day traders make as much money, if not more, on the downtrend as they do on the upward trend. So if you're going to sit around just looking for the longs, you're going to be really bored. So you need to understand that day trading, you short just the same as you go long. Okay. So what is shorting? It's when you're entering at a higher price point, exiting at a lower price point, and you take that profit in between. That is shorting the market. So what does that mean? It's usually when you have a downward trend, right? So again, if you're going to say, when do I short? Then don't even bother going into the market because you don't know anything about the shorts, right? So this is really important. You're entering at a higher price, entering at a lower, exiting at a lower price. Okay. This is what the shorting the market is. It's called the bear market, market going down, trending out. Who cares what the name is? It's like. Now, as I mentioned before, I scalp. So what do I go for? Is much smaller profits. So the cool thing about scalping is you overall momentum, but you could also really monetize on the mini trends. And that's immediate momentum. So you can monetize on those mini trends, right? And that's exactly what this is. So again, this mini trend, it could stop right here. And I understand that the overall momentum has been going up. So I'm not going in for too many shorts here, just that one quick short, because this could just be a correction and then it's going to continue back in the overall momentum. So you have to understand that. And I love these overall and immediate momentums because they really, really work, especially if you're scalping and understanding the trend, right? The trend movement. Okay, so let's now get into the consolidation areas and the transition areas. I literally call a trader's worst enemy. Okay, it's really, really important. Like I said before, consolidation areas, the sideways market, the narrow and undefined market, right? This is what it looks like. This is where I would say pretty much all traders end up losing 90% of their winnings, if not even more, right? So this consolidation area, this is that bouncing in indecision area. So why do we end up losing so much money in this market? Why do we do that, right? So here's the thing. We all know that day trading, it's a mental activity, right? What it is, it's a mental game. It's very emotional. I would say probably it's like 90% mental and emotional and 10% skill. I always say that I could teach anyone to trade, but what your mind is going to do and how trained your mind is, how strong your mind is, that's going to be up to you, right? But the reality is what happens with traders, and to break it down really simply, is we tell ourselves bullshit stories. So what are stories? Here's a good example of a story. You are talking to one of your friends on the phone. It's not like a great friend. It's just, like a person that you really want to, kind of become better friends with. And they invite you to a party. And you're all excited about this party. And they're like, okay, I'll call you tomorrow with I don't know, the date and whatever. All right. You're like, okay, cool. The next day comes along, they never call you. And another day comes along, they never call you. What starts to happen in your head? I don't care how strong and cool you think you are. You're going to start to develop stories. Oh my God, maybe they don't really like me. Maybe they changed their mind. Maybe they don't want me to come to the party. What did I say? I must have said something wrong. Why didn't they call me? So you come up with all these really, doom and gloom types of stories. It's a story. It's a lie that there's zero relevance to the story. It's just something you created. Okay. But what happens? You put yourself into this emotional state of mind. You're all feeling crappy. 3 days later, your friend calls and they're like, oh my God, I'm so sorry. My phone fell in the toilet and I couldn't call anybody. I didn't have your contact. Right. So everything that you said was just a story. It wasn't real. Day traders do this. Actually, people in the markets do this all the time. And that's kind of where that stupid, misguiding thing is, I'm going to beat the market or I'm going to predict what the market is doing. You'll never beat the market. You can never predict what the market is doing. Those are stories. So what happens when we are confronted with a sideways market? This is when all the stories come out. So I'm sure you guys know that there are two types of traders. We have the trend is your friend kind of a trader, right? So what happens here? When the trend is your friend trader is looking at this strong upward market, what happens? and they see the consolidation, they're starting to be like, you know what, the market's been going up all day. I'm going for a long. I'm going in long. Okay, the next kind of trader is the contrarian trader, and that's what I used to be. Where when it's basically you're constantly looking for a correction. So contrarian traders, what they'll be doing is they're looking at this market going high. They're like, you know what, the market's been going up all day. It's got to correct. I'm going for a short. Here's the reality, guys. The market isn't going to do any of that. The market is going to do what the market is going to do. And in this case, what is it doing? It's flat, it's undecisive, it has no idea what it's going to do. And we, as retail individual traders, we can never decide what the market is going to do, right? And we can never move it. That is something that you have to understand. You can never, ever move the market. We just don't have enough money. Unless somebody in this room is, trading millions of contracts, chances are you have to go along with what the market is telling you. So when you see this, there are three positions that us traders need to understand. One is understanding when to get into a trade. Two, when to get out of a trade. And three, when to sit out of a trade. And this is probably the most important and overlooked and underused position. So when you're seeing this going on, you got to sit out. And what do they say? Cash is king in pocket, right? That's the position you need to be in. So that's why consolidation areas and these areas are literally a trader's worst enemy, right? So we have this downward trend. Look at this consolidation. I don't know if it's going to go up or not. Right now, we're in 2020 hindsight. We get the benefit of seeing what happened. But for all I know, it could continue down. But in this case, I'm waiting for either one. And when I see confirmation either going up or going down, I'm completely impartial. That's when I decide what I'm going to do, what my next step is going to do. You could also have mini slowdowns. Again, because I only go for, you see this box, that's my profit and my target. My target and my stop. So if I see this and if I still continued going down, I would have been totally stopped out, right? But I don't want to also do a 50% move. You never want to be 50-50. That's like a coin toss. You want to be very strategic. So I also don't want to say, well, I'm going to go long just in case. In case of what? Do you really want to be stopped out? No, you need that confirmation, right? So again, consolidation areas, sideways areas, they could also move, but in do move, you could benefit on the first move of it, right? So this could be a perfect breakout until it becomes another one. This could be another beautiful breakout until it becomes another one. So you have to understand and work with the market. And that's the cool thing of it all. Okay. This is a sideways market, guys. Look at it, read it. What is it? Sear it into your head. I don't care. But this is literally where 90% of our money gets lost. Okay, so it's one thing to understand and be like, yeah, okay, cool, I get that. But how do I even know it's happening, right? How do you recognize that it's happening? So before we get into the actual recognition of how it starts, let's talk about areas. Areas are so important. They are so important. And if you guys don't respect, guess what? You're gonna be losing. And areas to me are the support and resistance areas. And I actually call them the safety areas. It's as if though you into a car. You know what? Don't even think about getting in a car. Think of yourself as a Formula One getting into your race car in the live market, because racing is technically being in the live market, right? The actual race, and not putting on your seat one drivers where the chance of you dying is literally 25%, not going to put on that extra safety. Hell no, they are going to be super protected, right? But it's amazing to me the amount of traders that just go into the market not having any of their safety gear on, not knowing any of their support resistance areas, any of their safety gear, and just going in when you could be in that horrible sideways zone, right? It's amazing. So let's talk about areas, because areas are really, really important. And resistance areas. This is what they look like, right? They are the tops and the bottom. Resistance areas. What's a resistance area? What is a resistance area? If you guys are not able to answer that in less than a quarter of in the car. So a resistance area is the market. It's the ceiling. It's where there's been a trend or a challenge. It's usually 3 or a lot more hits. So this is a resistance area. Like can only sit an hour, hour and a half in the market because it's such a high performance activity. So our trading sessions are also a lot less than, let's say, somebody who is, doing longer targets or obviously swing trading or even long-term investing. So for me, I have to have my resistance or my areas in place. And this is about an hour and a half. This is about my entire session with as many different opportunities here. However, area is because even though it could go down and change direction, it can revisit that today. We finally have a decent day and we're about to be hit with a second storm today. So please let me know if you're able to see everything. Am I sharing my screen?
Hey Marina, let me help you out. I can see your screen, but sometimes the connection, the audio is gone from time to time.
Okay, cool, because it's telling me that audience view is at red. Okay, cool, awesome. But I am definitely delayed because I see that everybody answered me much later. Okay, I think it's back. Thank you. All right, guys. So I'm going to continue on from where I picked up. All right, so let's continue. This is the resistance area. Like I really, really, really want to show you guys about these areas because they will save your trading. Okay, so we have support areas now. What is a support area? The support area is the floor of the market, right? It's where the market cannot break through. It is 3 or 4 strong hits over and over again, right? The support area. Again, it could totally break through. And I'm sure a lot of you guys have heard about the breakout trades, but if you don't know how to breakout trades, what's going to happen? You're going to end up missing the breakout trades. Support area. You could have a breakout from the resistance or the support. It is the floor of the market. This is what a support area looks like. Again, resistance, support of the channel. It could be a support and a resistance area. Support and resistance areas, okay? Let's now really, really talk about how do we start to recognize this is a resistance area. Look at this strong support area. Super strong, right? And it could break through for a little bit. I call these phobos because they continue in and a lot of people could lose money on that. However, there are ways to spot it and be prepared those as well. So how do we recognize when these areas and when these sideways markets are forming? Right? Recognize when they are forming. This is the reversal areas and divergence. And I literally call it the trader's map to shift in direction and right? Like to me, this is it's just my my ticket. This is, I pretty much use it as it could be done on any charting platform anyway. Reversal areas and divergences. So reversals, what are they? You guys have heard of them, I'm sure, but never maybe even
Marina,
applied it, but it's amazing. Hello?
Marina, sorry to interrupt you.
Yes.
I see that audience saying that charts not moving and they still seeing the resistance area chart. Can't see your screen changing.
Oh, okay. Okay. Let me. Okay, so are you guys able to see? Oops, hang on a second. Hang on. No, this is the wrong way. Shoot, hang on. What's going on here? All right, let me get out. 1 second, guys. Sorry about that. Okay, so let's go back to here. Are you guys able to see my presentation like this? I'm not even getting the questions. Okay, okay. All right, cool. Sorry. All right, so let's get back to divergences because this is like the key. If you guys get anything out of today, and I'm sure you're going to remember a lot of it now, is reversal patterns because reversal areas and divergences, these are like they're the most important signs, I guess you could say. They're like the golden sign that I use for all my trading. Okay, reversal patterns. These are my telltale signs. What are reversal patterns? You guys have probably heard of double tops, triple tops, head and shoulders, double bottoms, triple bottoms. So now what are they? They are the highest probability of indicators showing you when the change will happen and coupled with divergence. So what is divergence? I mentioned earlier that I use the MACDs as my most important indicator coupled with price action. What is it? So here you can see that the price action is continuing up. Meanwhile, the divergence area here in the MACDs is showing me weakness in that upward trend. So there is a very, very high position, high probability that the market is going to change direction. And that, as you can see, does happen. So here is a perfect example of a double bottom with divergence. So if I'm seeing the market headed in one direction and I'm seeing a double bottom or a triple bottom, and look at the divergence on the MACDs with that green light line. It is not to tell you 100% that you should go for the opposite direction going in for a long. No, what it is, it's an indication. It's an indication of a very high potential that it's going to switch. Or it's also the beginning of that support area, right? Support areas begin with just one or two or three hits. So how are we going to know that? This is when we start to spot it. It first happens through reversal patterns or even just divergences, right? This is when it happens. However, when I spot my reversal pattern with the divergence already, I'm already staying out of the market entirely. Okay, triple top, same thing here. As you can see, that is completely straight. Meanwhile, the MACDs is telling me that it's going down and it changed direction. So we have to now put it all together, right? It's one thing that it's just, okay, I'm recognizing support, resistance, divergences, reversal patterns, but how do we put it all together? And again, everything that I'm talking about, making of a daytrader.com, go and get your cheat sheet right here, making of a daytrader.com. Now, let's talk about putting it all together. We've all heard about the breakout trades, right? Like that's probably the most popular trade that we use, right? Or maybe not use, but more so hear about and know that it's a higher probability trade. So how do we spot the breakout trade? If we do not have our resistance and support areas in place, how are we possibly going to know when that actually happens, right? How are we going to be able to get in on this higher probability trade? So this is exactly what a breakout trade looks like, right? I'm going to explain to you a breakout very easily so you guys really, really grasp the concept of the breakout and the concept of those channeling markets. Now, your friend who one of your best friends calls you up and says, hey, come over. Hey, let's hang out. So you know the road. You've been to your friend's house 1,000 times. You're super confident with the road. You could pretty much do it with your eyes closed. You hop in your car, you hop on the highway going north to your friend's house, right? So you're super confident, everything's cool, but all of a sudden there's a huge detour sign saying construction ahead, and there's a guy pointing you going to go east, you have to go right because there's a detour. So what happens to me during detours is I get totally stressed out. One, what if the detour, I've been on detours where they forget to continue with the signs and now I'm lost in an area I've never been in. So I'm crazy stressed. Are they going to continue with the detour signs? What if I don't know where I'm going? What if you finally get to and they say, you know what, the road is completely closed for the rest of the day, but you could continue going on these side roads. And again, you could just take, these little sideways that will take me like 5 hours versus the half an hour. So I get really stressed out because I'm not really sure how to go and how am I going to get home? What if the road is closed both ways? Or maybe you're finally driving and they say, you know what, the road is totally broken. There's a huge manhole. You got to turn around and go back the way you came. And what if there's no detour going back? So basically, everything I just said, I am in complete flux and I am stressed because I don't know where I'm at. I don't know the detour, right? However, all of a sudden, the guy opens up the road and says, you know what? It's fine. Get back on the highway and just continue going north. You're back on that highway that you know exactly where you've been. And boom, there's this renewed energy and you're flying to your friend's house. That is the breakout trade, right? So during the detour, do you really want to be entering trades? Do you really want to be like, you know what, I'm definitely heading that direction? No, chances are you want to sit it out and wait to see when you have the confirmation, right? But once they open that road up and you're back on that highway that you know really well, boom, you've got that renewed energy. That is the breakout trade. But you need to know when that's happening. You need to know when that detour is happening. And that's through these consolidation areas. That's when you put in your support and resistance areas. Okay, the breakout trade. So what I mentioned earlier before is I focus on my MACDs pretty much for everything, right? So I know that I am in this massive zone, this consolidation area, and then boom, right? I'm continuing going straight. I'm continuing going long. So I look at my MACDs when I have a massive strength on the MACDs, no divergences, boom, I get into my breakout trade. That's how I know when the trades are happening. Okay, another bonus setup, it's the initial reaction trade setup. So you don't need to only use it for breakouts. On the contrary, when you're in a brand new trend, when you understand the power of that new trend, when it just shifted and get in as early as possible, even if you're swing trading or investing, you always want to enter at the best price possible, right? And it's usually at that shift. So you could also use the resistance and support areas for these moments just the same. When it finally, this is like a consolidation area, it's a transition area that shifted, and now everything is pointing here with a lot of strength in the MACDs and entering at the EMA lines, right? This is that particular strength that is the initial, I call it initial instant reaction trade, is when it's finally shifted. You have massive strength, massive run. Look at the zero line, massive area between here, and then you enter. I use my EMA lines for my entry points. Think of yourself as an archer. Archers don't just walk around on fields throwing their arrows around, right? They have a very secure place to stand from. They have a very specific area to stand from where they shoot their arrow to hit their target. That is what this EMA line is. That's exactly what the EMA does, right? It's where you enter the trade. Okay. Yeah, so feeling about just try how I feel about trading in general. I have no idea of these languages. So I just recommend before you go into the live market without understanding this, all of this is easily learned. I mean, resistance areas, support areas, they are not complicated. Reversal patterns, on the contrary, they're super simple because it's not algorithms, it's not special indicators and softwares. This is on any chart. And once you learn that, it's literally like when you hop in the car, buckle up your seatbelt, press on the accelerator, and go, right? It's that common. But when you first got into your car, you probably didn't know that either. So you learn it with time, and that's the beauty of it, right? Okay, guys, so like I said before, everything I just went over is in this particular document that I made. Excuse me, hold on a second. And now we're going to go into the live market, and we're going to be looking at the live chart right now. So as I mentioned earlier, I am an ES mini. This is all on the ES mini chart. I use a 610 tick chart. Because I am a scalper, I really like to be in the moment. So what is 610 ticks? So as you can look here, you could use any kind of a bar chart that you like. That shouldn't matter at all. So what are ticks? Ticks are literally transactions, okay? So each bar, you see right here, it says ticks remaining. Each bar has 610 transactions. If you look at my chart, I don't have a volume chart. Why? Because if you're in a 1 or 5 minute chart and the volume is, and first of all, little side note, volume indicators are really lagging. They're really slow. Okay, they are not completely in real time. So with my tick counters, if it's moving super fast, that means there's a lot of volatility. I see what's happening in the live moment, in the live market. As you can see here, it's moving really slow. That's because it's slow. Right now it's lunchtime. Lunchtime is usually a slow time. So every time it changes bars, it starts from 610 and counts down. But if it's moving super slow, I know that the volatility is low. There's going to be more indecision. It's not the market that I really want to be in. I like to be in super quick market, right? Yeah, sure. The cheat sheet is making of a day trader.com, and you should be able to access it for free. It's a free document. Making of a day trader.com. Okay, so this is pretty much what I look at when every time I sit down in front of my charts. Now, because I am on the ES is virtually traded almost 24 hours every day. They just take the Saturday off. So right here, you can see the day break. Interestingly enough, the day break is actually at like 5 p.m. Eastern. So the new day technically begins, which is now on the European session around 5 p.m. Eastern, 5:15 p.m. Eastern. So I still prefer to be in the market during live, during, I guess you could call it Wall Street time, because that's, we are trading the S&P, so it is more of a US market, even though it is traded all day and night. But I prefer to enter it around here. So even though I might start looking at the morning session or the afternoon session, I still want to know what's been happening. And that I start to do with understanding areas and which areas have been respected, which areas are important. Like here, this was definitely an area that was hit several times, right? So I don't know how important it is at the moment, but it's definitely something that I need to look for. And then it went through, once the market opened, it totally made new lows. And you can see here, we have another area that can be forming. Again, not really a full on area. So I'm not really concerned about it at all, right? I might have many areas here, which I definitely will be concerned about. And look at this, guys, this is like picture perfect, picture perfect double top. Look at that, right? And look at the massive divergence, right? And look what happens. It totally shifted direction. And this is that immediate momentum that I'm talking about. Even though we've been going up pretty much for the most part of the day, this is that immediate momentum, right? And again, we're looking at what's happening now, but this is a mini trend that I would really, really love to get in on, and I will be able to monetize at least on one solid trade. But it's an immediate momentum, and it could change at any moment because the overall momentum has been going up, and that's totally cool. And as you can see, that's exactly what happened here, right? And it continued up, and once it changes back and moves back up, I would be all over looking at this particular strength as part of an entry, right? That's what I'm talking about, understanding the areas. And now what's happening here? We are back into a pretty boring move. Why? Because you know what? It's pretty much explaining. Oh, look how slow it is. We've been stuck on 600 for like over a second. Normally the market moves ultra fast. And when it's moving super fast, that's when you, the higher volatility, higher volume the market is, the better it moves in our direction. And for us, right? It's much more stable. So the three EMA lines that I use here, actually, what I'll do is I will just show you guys all my indicators right here. So I use right here the EMA, I use the 52 period, the 20 period, and the 135 period, right? And my MACDs are pretty standard, fast 12, slow 26, smooth as 9. The one thing I do not do, so when you go into, again, any charting software, I use NinjaTrader, but I am not partial to NinjaTrader. My students are on like 10, 15 different charting softwares because I don't use any paid software. any paid indicators. So the MACDs, whichever you use, they usually come with three things going on at once. The actual MACDs, which is these little balls that I have, the average and the difference. I like to keep it really simple, so I actually just made the average and the difference transparent, so you can't see it, okay? So that's what you're seeing here. All right, let me see if you guys have any questions. Right. So what EMAs do you use? Why did I select those? You know what? When I began trading, I was using the 52 mainly. And like I mentioned earlier, I used three different charts, three different monitors. So they were on three different tick charts. I always use ticks because I really don't like the volume indicator. Like I said, it's lagging. So the tick indicator is really, it's in real time. I know exactly what's going on at this moment. The only thing that matters is how many people are getting in and out. And that's exactly what it's telling me, right? Because that's what's going to move the market. So I used to use the 233 tick chart, which is now my 20 EMA. And I used to use the 1597 tick chart, which is obviously 2.5 times longer, which is now my 135 EMA. So that's the reason why I use those, Joe. The red MACD lines, which line is it? Right. So what I just showed you is the 12, 26, 9. Oh, okay, cool. How do we get the recording? I'm pretty sure Anna is gonna send the recording to everybody. Yeah, I personally don't use the RSI, so I'm not sure if it complements, and I don't want to be steering you wrong. I've just been, once I found MACDs, and it took me a couple of years to actually recognize the MACDs work really beautifully for me. Could you please tell us the number of the moving average? So it's the exponential moving average. It's the EMA, not the MA, and it's 20, 52, 135. Right. So I know that the MetaTrader does not have tick chart. A lot of my students use the 1 minute, which gives you a little bit more, but I really prefer the tick chart. And I know that MetaTrader is definitely working on putting in the tick chart because ticks are not anything new. MetaTrader mainly has been always Forex, and now they are expanding into futures and equities. So now they're starting to add in a lot more. Somebody told me your goal trading is 4 ticks. Yes, it is 1 point entry, a target, 1 point stop, and you could do several different trades in a day. And if you start to load up with a higher contract load, instead of going for one contract, you're now doing 10 contracts for that 1 point. It goes from $50 to 500, right? Yes, they totally work with stocks. Absolutely. I have many students that use these for different indexes, for stocks. Absolutely. Because I'm not teaching you only my strategy, I'm teaching you to really understand what is going on. And that is truly what it's all about, right? It's for you guys to own the market rather than sit in some trading room and wait for somebody to tell you what they are seeing. You are seeing it for yourselves. You are knowing exactly what is going on, right? So what's the difference? You use price ticks versus, okay, do you any student? Yes, stock charts. Quite a few people actually, Peter, use stock charts. So, all right, it's really important for people who are trading ES, particularly futures. We never look at the price. We do not care what the price is because we don't go price. So each box here that you see, this is 1 point. In the mini market, 1 point is 4 ticks. Each tick is $12.50. However, it is a different tick than what the actual tick chart is. Unfortunately, it can get a little bit confusing because tick charts are transactions. The ES uses ticks as far as money. So that's why we prefer to talk about points, because 1 point is worth $50. You will never, honestly, I do not recommend going in for one tick. It's just not enough money, right? It's $12.50. Then you have to do the commissions. It's really not that worth it. So that's the difference, really. Okay. Hopefully that made a little bit more sense, right? Okay, guys. So let's get back into the presentation so we can start to wrap it up. And again, any questions you guys are gonna have, please send them my way. Now, wasn't that super fun? And now imagine if we could do this together every single week. And I am really excited about this part of the presentation because here is what most traders can do to truly unlock what is holding them back. And do you guys know what that is? Do you know what's really holding you guys back? It's how do you actually know if you are doing it right? So let me break it down for you. I've made something really special for you. When you get the cheat sheet, you immediately get put on the exclusive VIP list. And I want to encourage you to get that free cheat sheet because from makingofadaytrader.com, because this could be the turning point for you guys. This is a special invite that is going to be coming into your inbox. And it only is coming to the people who are in this presentation, only to those people that is in this particular presentation. Okay. Here is what I have for you. So many of you have been asking me during and even after presentations, do I have a program? I always hold back because I don't want you to buy another product. However, I have created something really special called Simplifying Day Trading Futures course. This is my signature program. It is short, bite-sized videos and explanations that literally show you what I do every time I sit down to trade. And you could do it from any device. You could do it on your phone, computer, laptop, desktop, iPad. You will be in essence with me side by side. But again, I can only make this invite special, the special invite to people who get the cheat sheet at makingofadaytrader.com. So make sure you go to that link and subscribe right now while we are live. And I don't want to just give you the information. I want to sit down next to you. As a special for the participants only, and only the participants, I am giving 6 months of one-on-one mentorship. So remember, go to makingofadaytrader.com, go there for your free cheat sheet, and it automatically registers you to be on the special list, but only people who register for the cheat sheet and only for the participants of this presentation. And I'm giving you one extra bonus. 6 months free membership to my live chat trade room, where I'm live with you, analyzing the live market and taking trades live with you, watching and understanding. Not only do you get me mentoring you for the 6 months, but you also get 6 months free membership into my live chat. This isn't like me hiring a bunch of moderators. It's me live implementing everything I teach you with watching and asking questions and implementing alongside me. The only way to get on this list is to get the cheat sheet right now, okay? Because the program is so full and so robust with so much information. I'm also giving you lifetime unlimited access. Now, I'm not going to release the price because I want to surprise you and delight you with the how value driven this is. What I will say is that it is literally less than the average of one trade. Literally less than the average of one trade. That's how much this program is going to be. But as with everything, there is a catch. So here's the thing. I only have 25 spots available. Due to my one-on-one mentorship, I am only able to take on 25 new students at this time so that you can get my full attention and commit to your trading. Remember, when you get the free cheat sheet, you get put on the VIP list and are eligible for the 6 months one-on-one mentorship and 6 months live trade chat room and lifetime unlimited curriculum access of my Simplifying Day Trading Futures course. And if you haven't gotten the cheat sheet yet, go now and get it. Makingofadaytrader.com. Okay, so I have some more questions here. Do I trade earnings as well? I am not trading individual stocks. Earnings are only for individual positions. I am trading the ES, which is the S&P or the SPY. It's the index of the S&P. So it's 500 companies. It's difficult to just do earnings, right? So earnings is a little bit different, and earnings is very speculative. You really have no idea what's going to come out. So it's not even technical anymore, right? Okay, so back test. Oops, hang on a second. So I live for back testing. Absolutely live for it. Why? Because I'm going to give it to you in this example. I personally and unfortunately have had almost 9 operation surgeries in my life, right? I have had 3 laparoscopy surgeries alone. I don't know if you guys know what laparoscopy is, but it's very non invasive operations, right? So, do you think the guy that thought of a laparoscopy, this was like what, 30 years ago? I think I had my first one 20 years ago. 30 years ago, said, you know what? We could do a laparoscopy. We could do a non-invasive operation, only without leaving huge scars on people, and that they could recover in several days versus several weeks. Do you think the next day that person decided to go and try it on a live human? Absolutely not. They back tested it. They went in, tried it on different, whatever it is that their thing is, in their laboratories, on maybe in cadavers, whatever. They back tested to see exactly how it is. And now it's one of the most common ways of doing surgeries, right? That's what back testing is. So if you guys spot a specific trade, and I have names for every one of my trades. When I first began, I had over 40 trades. I've now narrowed it down to 10 trades, but they all have very specific names. For instance, I have the magic zone trade, I have the failure trade, I have a breakout trade. These trades, I've then gone and seen the exact way of how it always sets up. And I personally have done 90 trading days of back testing before being in the live market. Some people, I think 45 trading days is totally acceptable, right? Joe, you cannot locate the download link. Are you opening the email? It should be at the very bottom. TJ, do you get the cheat sheet no matter what? Yes, the second you go into makingofadaytrader.com, it's in the first email that you will receive. Immediately you will get that. It should be at the bottom. What would you need to be capital to get started? So if you're going to be starting with the ES minis, normally you need $500. I personally recommend $1,000 to begin with. It is not a high capital start, right? It's a lot less money as well. All right, guys, let me know if there are any more questions. And again, I am sorry about the technological issues. I'm super grateful the ones that ended up sticking around and staying through this. I really appreciate your patience. And Anna, again, I'm so, so, so grateful. Thank you for having me once again on this as a presentation for Investor Expos. Thank you, guys. So please let me know if you have any more questions. And if not, thank you. And I hope you have an awesome Tuesday and stay safe. Hopefully the hurricanes are not going to be hitting you guys. We are bracing ourselves for tomorrow for the second, what is it called? Iota, I think, right? Does it also work for A-wingers? I've never heard that word. Sorry, I don't know what A-wingers is. I'm pretty sure it is recorded. So yes, you will be getting the recording. Absolutely. For swingers, yeah, absolutely. Swingers, that could be taken many different ways, but for swing traders, yes. um, yes, absolutely. I have quite a few swingers or swing traders. Yes, absolutely. I personally use NinjaTrader, but a majority of my students work on Thinkorswim, Chart Trader, TradeStation, MetaTrader, on pretty much any that permits you to have the basic indicators, right? I am not partial to NinjaTrader whatsoever. All right, guys, let me know if there's any more questions. Please let me know. And I'm super excited. Thank you again for being here and for joining me. And thank you, Anna. Have a really great day, everybody.